no forecasts, but do you think we're heading for a bear market?
Yeah, particularly in America. I mean, it is grossly overvalued. The arguments I've been putting forward to back that up really relate to a withdrawal of foreign capital from America. That even before Trump, this was true. But the more Trump beats people up on trade, and you may say, well, I always win the game on trade. Maybe. But you do know that foreigners own $61.5 trillion US worth of your assets. 54.5 trillion of that, should put that into context. People will be saying, is that still a big number? 61.5 trillion is 209% of GDP. If you, as Donald Trump, create uncertainty as to how you're going to treat foreigners, maybe not as well as you're going to treat everybody else, why wouldn't they sell? If we, the United Kingdom or France or Germany, wants to bring savings back to build all this capacity we're talking about, where are they going to get the money from? Overseas liquid portfolio assets, that's the treasury market and the S&P 500. So I think he's undermining the foundations. So 33% of the treasury market's owned by foreigners. The number, this is all data from the United States Treasury, 40% of the corporate bond market's owned by foreigners and 17% of the equity market's owned by foreigners. I think that capital will be leaving. He thinks it's going to be coming in because he's got Mayoshi Son and all these guys pledging billions to come in for foreign direct investment. But I think the portfolio investing will be going out. So my basis for a bear market is not saying, hey, there's going to be a recession. It could well be. I don't know. I'm not really in the business of forecasting recessions. I think there's going to be a significant exodus of capital from the United States of America to fund what has to be funded across the developed world, including Japan. The two countries that really count in this are Japan and Germany. They're the countries with the big net positions in overseas portfolio assets. I think both of them need money home. And both of them, well, Germany needs to invest and Japan needs to shore up its exchange rate. And when you look at what they're going to sell, it's America.
And you think, because if you look at, books like The Triumph of Optimists and stuff, and you see American outperformance tends to then be followed by the rest of the world outperforming, and it kind of goes in these cycles. And we've had this long period of American outperformance. It's probably about 4 or 5 years longer than any other period. Do you think we're going to revert?
Yeah. So we have a word that keeps cropping up here. It's called exceptionalism, right?
Yeah.
So when I started in this business, it was Japanese exceptionalism.
Yeah.
Because the Japanese were much better at running companies and their stock market was on 60 times earnings. Turns out it wasn't on 60 times earnings because they were that exceptional. Turns out it was a money, credit and asset bubble. Mm-hmm. I then moved to Hong Kong or East Asia, and there was an exceptionalism there. It was called the Asian Economic Miracle. Exceptional. They just found a way of growing that nobody else had mastered. Turned out it was a money, credit and asset bubble. Then we had that wonderful period of Irish exceptionalism. You remember that the people of Ireland had been enfranchised to become the world's greatest entrepreneurs. Many of them actually did. But the problem was that Irish assets were in a money and credit and asset bubble. So when you have that exceptionalism, which is what those long cycles are about, that God, these guys have got the magic. They know how to do it. The rest of us are really stupid. And that's what we got to with America. We say, well, they know how to do it. None of the rest know how to do it. And there's a little bit of truth in that, but there's always a little bit of truth in everything. But then it turns into 38 times cyclically adjusted PE, debt to GDP ratio, the highest ever recorded in the history of the country. And it's clearly a money, credit, and asset bubble. And we like to explain it away as American exceptionalism. And perhaps the market's beginning to work out that it isn't all about American exceptionalism. So I'm here to proclaim that soon it'll be all about British exceptionalism. 10 years from now, we'll be talking, I don't know what it'll be. There'll be something that, but clearly we won't be exceptional. Let me just say for the record, we aren't and we won't be.
We'll just be building our own credit asset bubble.
Yeah, we'll be building our own credit asset bubble.
Let's go.
And everybody always saying, they're exceptional. These guys, they just got this exceptional, they've got this magic sauce.
Well, we've always had the sauce. We're just back again.
Magic and
don't call it a comeback.
Oh, yeah, we've been here for years.
And somebody will be sitting here telling you it's British exceptionalism.
We'll be sitting here telling saying yes.
Time to sell.
yeah. There you go. That's when you've got the top of the
it was that easy because not all of them. I've only seen 4 or 5 exceptionalisms. And it's not actually a word that crops up that often.
When it does, that's when you sell.
Yeah, when it does. When it does, I think you have to.
There's your book.
You have to give it a good sniff and say, really? That exceptional? Yeah. Really? 60 times or 38 times CAPE and other markets at about 12, 13? No, I don't think so.
That was a clip from our full-length conversation with Russell Napier, who's a financial history expert. If you want to watch the full interview, you can check it out right here.